Good day. My name is Dr. Nhlanhla Mbuli, and I am the presenter for the course Fundamentals for Financial Evaluation of Projects. This course is part of a series of courses that the South African Institute of Electrical Engineers offers as a service to its members and other parties at large. The aim of the course is to teach the attendees the fundamentals of financial mathematics. Furthermore, the course aims to demonstrate how these fundamentals can be applied in assessing whether there is financial value in investing in projects. Professionals in various disciplines have to develop technical solutions to infrastructure problems arising in their environments. Technical know-how of the discipline is essential in developing these solutions. However, if the resultant projects are to be funded by business, professionals must also demonstrate that there is financial value in investing money in these projects. This is when the fundamentals of financial evaluation become handy. Completion of this course entitles the attendee to 3 CPD credits recognized by EXA for Category 1 activities in the process of renewal of professional registration. Some more about myself. I am an electrical engineer by training and am registered with EXA as a professional engineer. My area of expertise is transmission and distribution planning, and I'm a corporate specialist in this discipline in Eskom. I've also received training in the areas of statistics and operations research. I'm also a senior research associate at the University of Johannesburg, where my key activity is supervision of postgraduate research. Considering financial investment in infrastructure particularly, there are 3 possible motivations for wanting to do so. One objective could be to increase the capacity of the current infrastructure in order to meet some increasing demand or to improve the operations of facilities. A second possibility could be renewal of infrastructure that may have aged, resulting in the deterioration of reliability. The third possibility is related to dealing with obsolescence of technologies being used. This can be necessary if more efficient and more capable technologies are introduced or if technologies currently being used are discontinued. Budgets for financial investments in infrastructure projects can be huge. As an example, it is estimated that globally $3.2 trillion need to be invested in transmission and distribution infrastructure in the next decade. Another example closer to home is that of Eskom. The company invested an amount of 44.7 billion South African rands in infrastructure in the 2018-19 financial year. From the foregoing discussion, it goes without saying that investment decisions made without financial considerations can have adverse consequences for the business. One example of this is that prices of products produced will not be related to reasonable costs of producing these products. This can result in unjustifiably higher prices of products than necessary. Secondly, financial sustainability of a company may be harmed as its resources may be committed to investments that do not bring acceptable value. The final example applies to public entities. If they invest in financially unreasonable projects, there will be a drain on public funds which could be better utilized in improving the lives of the citizens. This course is designed to run over 3 full days. Day 1 will set the scene for the course and then discuss the context for investments in projects. Among the issues covered will be needs for investments in infrastructure, capital budgeting and projects, why financial evaluation skills are essential, and consequences of lack of prudence in the use of funds. The process for planning of projects will then be discussed, all the way from identifying the need to invest up to determining the preferred techno-economic proposal. The key role of financial evaluation and justification will be highlighted. A discussion of concepts from financial mathematics will then follow, and these concepts will include simple interest and discount, compound interest, annuities, amortization and sinking funds, and evaluation of cash flows. On the second day of the course, discussion on financial mathematics will continue, but will focus on methods of financial evaluation of investment proposals. The methods to be discussed include the payback method, the average rate of return, the internal rate of return or IRR, the net present value, the profitability index, and the modified internal rate of return or MIRR. The later part of day 2 will concentrate on the concepts of inflation and depreciation. These have significant impacts on the assessment of cash flows of investments. The specifics to be covered will include the Consumer Price Index or CPI, the Producer Price Index or PPI, inflation, and depreciation. Day 3 will aim to apply the theoretical knowledge learned earlier to real-life situations. Aspects to be covered include organizational procedures and policies for approval of projects, projects that must be done for statutory or strategic reasons, and projects to increase capacity in order to generate more revenue. Projects aimed at reducing operating costs will also be discussed. Furthermore, projects for enhancing the reliability and quality of service will be dealt with. Lastly, a case study on connecting a new customer will be presented to the attendees. The last phase of the course will discuss process issues related to planning of projects. These include the planning report for the project approval documentation needed by the evaluation committees, the project approval processes, and filing of project records. This presentation has given an overview of the aims and content of the course on fundamentals for financial evaluation of projects. As stated earlier, completion of this course entitles the attendee to 3 XRCPD points. The course will be run over 3 full days. You can get more details on the course by visiting the SAIEE website. Also be on the lookout for correspondence from SAIEE on when the course will be offered. Thank you for watching.